Hello everyone, welcome back to Upside Down Data. Today I want to talk about Hedera Hashgraph's newly announced DeFi fund and what that might mean for the future price of HBAR. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the news, you may have seen that Hedera recently announced a pretty sizable DeFi fund, $155 million fund to incentivize DeFi development and adoption on its platform. A good chunk of these rewards are meant to basically incentivize adoption, usage of decentralized finance protocols that get deployed on Hedera Hashgraph. And this is a similar tactic that's been used by other Layer 1 blockchains to try to bootstrap adoption from generally more retail type of investors. You know, you can think about Avalanche being one of the earlier Layer 1 blockchains to do this back in the summer, which, in my opinion, really catalyzed its explosive move out of the summer. You know, Avalanche was trading at around $10 at its low in the summer, went up to well over $100, you know, after that. And in my opinion, on no small part, based on the DeFi adoption that it gained from some of those moves it made early. Now, obviously, we're not in the summer anymore. We're significantly further into the future. And so I think the question we can ask is this fund going to have a similar effect for HBAR, or is it too late? You know, is it the case that incentivizing DeFi adoption at this point is not going to have such a big effect? So I want to talk about a couple different things that I'm thinking about in terms of whether or not this is or how bullish of an announcement this is. I think, in my opinion, this is a bullish announcement in the sense that, you know, incentivizing adoption of the blockchain, hard to believe it'll do anything but help the adoption of Hedera Hashgraph. But we're going to have to obviously see, and there's some things that we can consider when looking at this. So the first thing I want to talk about is just going over here to DeFi Llama, just to talk a little bit about DeFi adoption, and how that's generally been corresponding to the price of different Layer 1 blockchains' native tokens. So here I'm just showing you total value locked on all chains. As you can see, Ethereum is still kind of the big dog, as we expected, but there's been some shifting around that's happened over the past few months, where Terra Luna has actually come out to be kind of the winner in terms of in the runner-up category to Ethereum. We can see that Luna is currently sitting at a total value locked of almost $30 billion, $29 billion, which is quite impressive. You can see it's been growing at a very rapid rate recently, in no small part, you know, the popularity of UST as a stablecoin, the anchor protocol on Terra, which has really nice yield on stablecoins, that being something people will probably run to during bearish conditions, wanting stable assets rather than volatile ones. And the Luna, the token, has been doing very well in price recently. You know, it's really been able to push back up towards its all-time highs and stay elevated, stay quite bullish, even though the rest of the market had been quite bearish. And so in a lot of ways, something that we've seen in the past, especially coming out of the summer, is that total value locked on DeFi on a Layer 1 blockchain has generally led to an appreciation in the price of that asset, right? We saw that with Avalanche. We saw that even with the Binance Smart Chain. You know, BNB went on a pretty nice run back in the fall. Solana obviously went crazy. Phantom went crazy. Matic did really well. You know, when you look across these, a lot of these assets have done quite well, and in my opinion, on no small part based on the DeFi adoption. Because what DeFi adoption does, it creates demand for the token, right? You need the native token, for example, AVAX, to use DeFi on Avalanche. And so that creates demand for that asset. And it also just creates hype, it creates speculation, people pour in, trying to chase the pump that comes with that, etc. So when we think about what this might mean for HBAR, from this perspective, it should only be good, right? Or that's what we might expect. That if this $155 million fund really does incentivize people to build DeFi protocols on HBAR, which then brings people into the ecosystem, if history continues, that should be a good sign. And one of the things that we're going to have to watch for, of course, is what kind of opportunities arise in the HBAR ecosystem. You know, one of the things that we tend to see with these kind of incentive programs is a lot of the people who come in early are kind of the tourists. They're not really there because they believe in the project or they want to stay long term. They're just chasing yield. So to get that kind of initial speculative pump, one thing that we might need to see from HBAR is some projects launching on it that are offering kind of insane yields, especially taking advantage of those kind of that incentive fund to offer some really high initial yields. And that could be good to offer an initial pump for HBAR, though it might not be long lasting, because what can happen is once those kind of early funds dry up and the yields go back down to more reasonable levels, all of those kind of DeFi tourists just pack up and leave, go to the next chain that's offering really high yields, and just abandon where they came from. And so that might not be something that's all that great for the long-term health of HBAR, though it could lead to a short-term pump that could drive the price quite high. But again, that's going to be something that depends on how those DeFi protocols develop and what they actually do when they launch. Are they going to just maintain lower and more sustainable yields, in which case we might not see that huge influx in DeFi tourists, but it might mean that the people who get in will stick around for longer? Or will we see that huge speculative pump that just kind of fizzles out once the incentives end? And that's something I think is important to keep in mind with this fund, right? Is how it's used could actually have a lot of impacts on the long-term benefit this has for HBAR. Because again, I think if it's just a speculative bubble that bursts, questionable how great this will be for the long-term benefit of HBAR, right? If the only people who really get in, or the most of the people who get in on the basis of this, are just the tourists who leave afterwards, arguable how much that actually helps Hedera going forward. If it's a more, maybe slower burning, but more sustainable kind of usage of this fund, maybe that means that people come in who are willing to stick around for longer because the yields won't just dry up immediately. But you won't get that huge speculative bubble that'll just burst immediately. Something that we're going to have to wait and see, but I think it'll be interesting. Now, the other thing that I think is important to consider here is that Hedera Hashgraph has had a slightly different approach to being a layer 1 blockchain than a lot of other ones, right? You know, a lot of these other ones we were talking about here really kind of marketed themselves, and kind of from the get-go were trying to be that kind of more general purpose, more retail-oriented play, and especially in terms of things like DeFi, right? You know, Avalanche, Phantom, just having a bunch of protocols on them that are accessible to just kind of general retail folks, and of course whales will also participate. But it's not supposed to be something that's tailored towards, for example, business or something like that. Whereas Hedera Hashgraph has really kind of made their brand be about enterprise, right? You know, that's something that is talked about a lot. Yeah, the developers talk about this a lot. It's, I think, just something that comes with the Hedera Hashgraph brand, is that's really designed to try to allow businesses to build on top of it in a way that might be sustainable. So it's not necessarily, or at least as of so far, Hedera Hashgraph hadn't really been targeting the retail audience specifically. They were more so focused on trying to get business adoption and using that as the vehicle for long-term sustainability and growth. And I think that's, you know, that's totally reasonable that one could do that. But the one thing that we have to think about with this kind of DeFi fund is, you know, is this moving Hedera too far away from what it's trying to build, right? You can always ask the question, all right, there's $155 million that are being put in to essentially incentivize retail adoption. That's mostly what these kind of DeFi projects do. It's unlikely that too many businesses are going to hop into DeFi at this point. It's just still a bit too risky. It's not really the main focus of these types of plays. So the question that we can ask then is, like, is this the best use of that $155, right? Would they have been better spending this to try to push forward that enterprise goal rather than trying to get retail adoption? Because one of the things you always have to be careful of, especially in a crowded market, you know, just look at all the competition that exists in the DeFi space, is, you know, if you're getting into this playground, if you're getting into this world here, you're going to have to be competing directly with all these chains, trying to steal users off of them, because, you know, we're kind of exist in a point in the market where there aren't just tons and tons of new people coming in, so that getting new users is just super easy. Really, there's a lot of competition between these chains to kind of steal users from one chain onto the other. And so if HBAR is getting into that, you know, it's one of those things that I think it's fine if they're willing to kind of go the distance with that and really kind of continue to try to incentivize DeFi. But I'd be concerned if Hedera Hashgraph kind of loses its focus, if it's kind of dabbling in DeFi, but then goes back to its enterprise focus, but then goes back to dabbling in DeFi. It might just get eaten alive by layer 1 blockchains that are focused, that are saying, we are going to do enterprise, or we are going to do DeFi, and not flip-flopping between them. So it's just something to watch going forward of how this is handled. So I think if Hedera Hashgraph is actually serious about DeFi, and if this is just the first start of something bigger, then it's very possible that they could go ahead and start competing with some of these other layer 1 blockchains. And there are, of course, some things about Hedera Hashgraph that are desirable from a DeFi perspective, right? And one of the things that's useful about Hedera Hashgraph is the fact that its fees for different things are pegged to a specific dollar amount rather than a fraction of an HBAR, for example, which means there's consistency. And when we look at their smart contract service, which would be really the backbone of any kind of DeFi ecosystem, we can see that the fees are all generally pretty, very reasonable, very much competitive, if not significantly better than a lot of its competitors up here. And one of the advantages is that these will not change unless the governance decides to change these amounts, right? So no matter what the price of HBAR does, this will remain consistent, which is something that DeFi users would likely enjoy, right? And to not have to worry about gas fees randomly spiking. It's actually something that happened to Polygon recently, where there was some decentralized or some blockchain games that were using Polygon that were creating huge bottlenecks in volume, basically just crazy volume that was getting transacted on the Polygon network through smart contracts, NFTs and things like that, that ended up causing the gas on Polygon to really spike up to for Polygon quite high levels, which people got annoyed by. They didn't like the fact they were having to spend so much money all of a sudden just to complete a transaction. Because again, when you're dealing with retail people, they might not be moving all that much money around. And so if you're having to pay even multiple dollars per transaction, some people just don't want to do that because, if you're moving around $50, you don't want to be spending $4 or $5 just to make a transaction. So that's one thing where I think Hedera Hashgraph could distinguish itself to some degree from its competition because it has these more stable fee structures. Of course, the other thing that we're going to have to keep an eye on as Hedera kind of gets into the DeFi space in a more serious way is how it handles the volume. One of the things that is often vaunted about Hedera Hashgraph is its transactions per second, right? And really the number that's often talked about is this 10,000 transactions per second number here. But it's important to note that this is really just referring to kind of cryptocurrency transactions, or these very kind of more simple transactions. So these kind of transactions just being, I send X number of HBARs to someone else. That would just be a simple transaction. And on that, we know that Hedera Hashgraph can handle many, 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 many transactions per second. There's really no concern about bottlenecks anytime soon. And especially once sharding gets implemented, that should not be an issue. The thing that's a little bit more potentially concerning, or just something we have to keep an eye on, is that if Hedera Hashgraph did become a massive player in the DeFi ecosystem, its smart contract transactions are at a significantly lower number of TPS, only 350. And this is from the official Hedera documentation right here. So this is the official number, 350 transactions per second for smart contract executions, which is obviously way fewer than 10,000 transactions per second. Now, of course, if Hedera Hashgraph implements something like sharding, that will then increase this amount, or it should increase this amount. And so maybe that will be something that just as Hedera Hashgraph scales on DeFi, that enough that some of those upgrades will be implemented, and that will smooth things out. But it's just something that we're going to have to keep an eye on as really Hedera gets battle tested in the smart contract space. We already know it can handle a lot of just basic transactions, but can it handle the same volume of smart contract transactions? Something we're going to have to wait and see. But again, if there is some issues with that, if we do get things bogged down, it just might be one thing that would make it harder for HBAR to compete with some other chains that are quite quick with some of these smart that already have sharding implemented or have very quick execution of smart contract. Chains like Solana, for example, extremely quick, or Elrond already has sharding implemented, things like that, which can handle quite a few smart contract transactions. Just something that we're going to have to wait and see with HBAR. So from this perspective, what I'm kind of looking at here is I do think that, in the short term, kind of no matter which way you slice it, I do think this is bullish for HBAR. Like, I just don't see how it's possible for you to have this massive incentive program and have that not drive some hype into the chain and have the price start to move up. But I think when it comes to the more long-term viability of this, or how this is going to affect Hedera Hashgraph and HBAR in the long term, is really going to depend on how this is executed and really what HBAR decides to do. Do they really kind of go deep into battling in the DeFi space, in which case maybe they're going to try to start taking market share from some of these? That's one path to success if they try to attract a bigger, more sustainable retail market. But if they're going to stick with this enterprise model, I'd like to see focus as well. I'd like to see that them not get kind of split in two directions and then not pushing the ball forward fast enough in either one. Really, I'd like to see this prioritization being correct to really push forward what's best for HBAR in the longer term. So just to wrap us up, I want to look at the price chart, and then I also want to show our risk model for HBAR just to give some additional context about where we stand. So this is where we are right now with HBAR. We see we put in this nice rally coming out of these local lows down here, and we're currently testing an area that has quite a bit of volume has transacted at this level in the past. And what's useful about noticing this is that this could act as a point of resistance for HBAR moving up at around this 25-cent level. Now, one of the things I think is kind of interesting with HBAR is how it reacted to the news about how that fund came out, right? So this news launched or released yesterday that this fund was being released. And HBAR did have a pretty nice pump, about an 8% pump, but we've kind of, we had this huge big wick going all the way up that came back down, showing, that initial kind of hype kind of ended up getting sold off a bit. So we kind of lost quite a bit of that upside. And now we're kind of trading down, which in the short term just suggests that the market potentially wants to see more before it's willing to get too excited about this news, right? Because oftentimes when you see these things announced, you'll see a huge pump in the asset and then maybe some hype that continues forward. But one thing that I actually suspect might happen is that this information might not actually lead to a huge speculative bubble until we have large DeFi projects actively launching on HBAR. That it could be the launch of the first kind of big DeFi project, especially one that's offering really high potential yields, at least to early adopters. That could be the thing that maybe would shoot HBAR's price up really far. So just something that I'm keeping an eye on here, that the market did react to that news in a positive way, but it could be that we're really waiting for kind of being more close to a lot of those DeFi projects launching, or we'll end up seeing that actual big pump that we've seen in some of the other assets leading into that. But of course, who knows what happens? A lot of that's going to also be dependent on the broader crypto markets, right? As long as we stay bullish, then I think that could create a huge speculative bubble that shoots us really high. But if the market suddenly turns really bearish, then a bullish catalyst, even as large as this, might actually just kind of fizzle out if everyone's just capitulating out of crypto altogether. So that's something that we're going to have to keep in mind. But this is not totally unexpected to me, given the fact that we're kind of still waiting on those big DeFi projects to be launched on Hedera Hashgraph. Okay, so to wrap us up, I do want to just show quickly the upside downside potential indicator, UDPI, for HBAR. So I'm showing you the long-term version. This cares about moves that play out over months to years, so a longer-term focus UDPI. We have the price of HBAR here on the y-axis in logarithmic form, and this is just the price action color-coded to our risk model. So higher values are high risk, so once you get up into the red, and then lower values are lower risk, so -5 being the bottom of the scale there. And you can see this indicator does a good job of identifying these low risk points where accumulating HBAR has been advantageous, as well as these high risk points where distributing HBAR has been advantageous. And we're in the green zone again right here. Even in this big move up that we've had, we've still remained in the green zone. And we see more specifically where we are if we just flip to this view of the indicator. This is just the raw output across time. So you can see that we've been kind of, for the last while, kind of in this range between -3 and -2, suggesting that we have considerably more upside potential that seems realistic to the model than downside potential that seems realistic. And we've kind of been just hanging out in this range, and now we're breaking back up as HBAR is realizing upside potential, as it's moving nicely up from the lows. I think about a 45% move from the bottom. We're starting to then realize some of that long-term upside potential, but the model thinks there's quite a bit more that's realistic should HBAR pump, and especially if something like that DeFi fund proves to be a bullish catalyst, we could end up really shooting to the upside. And here's the overall, just look at the different time frames, right? So the long term, -1.91, so more upside and downside potential is realistic. Medium term is similar, so in the coming kind of weeks to months, similar kind of risk reward it's suggesting. And the short term, more upside and downside potential that's realistic, but we have started chewing that up. We're up about 45%. Makes sense that we're kind of starting to kind of chew up some of the more realistic upside potential. But again, still more room to climb should HBAR decide to really break out to the upside. HBAR right now is really kind of testing a level of resistance right here, both from that volume perspective and just looking at the price action. But if we break up higher, the short-term UDPI thinks that we could have higher to go. So to wrap us all up, I think HBAR, from the perspective of a risk indicator, has plenty of upside potential that's realistic for it to realize, and it certainly could, especially on the back of something like this. And my personal kind of view of this, or my overall kind of evaluation, is I do personally think HBAR has a lot of promise, right? I think the tech is interesting, it's new, it's different than what exists in a lot of the rest of the crypto space. Their way of basically just organizing a decentralized ledger is by nature unique. You know, it's a hash graph, it's not a blockchain, and there's some kind of unique elements that are different that could allow it to be better in a lot of ways, faster. But there are things that we're going to have to wait and see about. You know, can it compete in DeFi? That's one consideration. But then also just from the tech side, can they really scale up that smart contract scalability to make it really just kind of the obvious choice above some of these other competitors? Because really entering into the DeFi space this late, I do think that HBAR is going to have to do something to differentiate itself. It's going to have to really flex its muscles, potentially on something like the tech size, to just make it the obvious choice. That's just obviously better than these other ones. Lower fees, faster transactions, that kind of thing. So something we're going to have to wait and see. I certainly am not going to be betting against HBAR or Hedera Hashgraph, but again, we're at the point now in crypto where the proof has to be in the pudding. Promises are no longer enough. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.